This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap Podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap Podcast. I'm your host, Robert Kraft. Thank you all so much for the support and for tuning in. Do me a quick favor. If you like what you hear at Planet MicroCap, please take 2 seconds to give us 5 stars on Spotify or Apple. This helps with the search engines so that more folks can also discover and engage with all things microcap stocks. We're excited to announce that we'll be partnering up with MicroCapClub for our full slate of investor conferences in 2025. Ian Cassel and his team at MicroCapClub have not only built and fostered the best community of microcap investors, but it's arguably one of the best investing communities, period. We couldn't be more thrilled to leverage our expertise in curating and hosting large-scale microcap conferences and teaming up with MicroCapClub to put together world-class conferences for the microcap community. First up, Planet MicroCap Showcase Vegas, in partnership with MicroCapClub, will be held on April 22 through 24, 2025 at the Paris Hotel and Casino in Las Vegas. Registration is now open. To register and join us in Vegas, please visit planetmicrocapshowcase.com. See you in Vegas. Now, my guest on the show today is Tristan Waine, better known as @hurdle_rate on Twitter X, and editor-author of the Hurdle Rate newsletter on Substack. We've talked many times here about the circle of competence, investing in what you know, looking at companies that produce goods or services that you actually consume, a style of investing, or more specifically, idea generation that Peter Lynch made famous. In our conversation today, Tristan and I talk extensively about this concept as it pertains to his investing style and philosophy. Specifically, we thought we could up the boring business ante by talking about the sexiest businesses alive, accounting and document management software. But in all seriousness, we had a great time, and Tristan provides some valuable insight on the topic of investing in what you know. Tristan mentioned a number of names during our interview today, and for full disclosure, I am not a shareholder in any of them. Thank you again for tuning into the Planet MicroCap Podcast, and please enjoy my conversation with Tristan Waine. Tristan, thank you for joining me today. How you doing, man?
I'm doing good. Thank you for having me.
Absolutely. It's great to have you on here. Look, we were just talking a little bit offline how, I've been a follower for a while now, and I'm glad the timing's working out, and let's dig right in. So, like I said, been following for a while. Hurdle Rate's the newsletter on Substack. You can follow you on Twitter X, Hurdle_rate. For those that aren't familiar or haven't been following the Substack, or aren't subscribers, haven't seen your posts, all that good stuff, where would you say your passion for investing, everything having to do with investing, really began, and how'd you get to where you're at today?
If I was to start at the start, so my father sort of got me into investing, and the way that he got into investing is he used to work as a steel worker at BlueScope Steel, and that used to be a subsidiary of BHP. They spun out of BHP in around 2000, and just beforehand, there was a rather generous employee scheme. It was like a matching employee scheme, and that would sort of match contributions to a share portfolio, and that's kind of the way he got into things. And then sort of fast forward maybe 5-10 years, there's a mining boom, and then it's kind of like a bit of a mania, I suppose, in Australia. Where everyone and their dog was getting into junior miners and, sort of hot stories. As you can imagine, that didn't go as well as most people would have expected. So, I guess that's kind of where he got his attention into individual stocks, as opposed to just buy and hold. I suppose after that, not probably maybe a few years after the mining boom, I actually bought my first stock. And that would have been around 2012, thereabouts. And it wasn't until really maybe 2018, 2019 when I started to actually really buy and sell securities. So if I was to age myself in 2012, I was only 16. So it wasn't until I got to maybe 21 where I started to really like actually work on my portfolio. And then I started writing stock pitches in 2019. So I would really say that would be my first, if you want to call it starting point, that would be mid 2019. And that's generally sort of the way I convey things in all my material. But yeah, I suppose I kind of got started not really knowing what I was doing. I read a few books like Buffett Beyond Value, and then Intelligent Investor. Rich Dad Poor Dad was a good one for me. Yeah, there's a lot of books that told me just generally accumulated my knowledge. And at the same time, between the years of 2015 and 2018, I was at university studying accounting and financial planning. So that kind of plays into my interest as well. In 2018, I started full-time employment, and that's really kind of correlates with when I started to take things a little more seriously and strategic.
Yeah, real quick, let me stop you right there, because is that when you started working at Kelly and Partners?
Yeah, so my history in employment is I started working as I was just a bookkeeper, like not a accountant, a bookkeeper. You just do the bank reconciliation and just average like payroll sort of thing. I was a bookkeeper in university, so that was only part-time bookkeeper. And then in my last semester of university, I got my first full-time role. I was at that role for 3 years, so that was at a smaller firm in my local town. And it wasn't until the start of 2021 when I started working at Kelly Partners. But interestingly, I was shareholder of Kelly Partners from 2019 onwards. So it was 2 years in before I even got my job in Kelly Partners. So, and interestingly, the story of how I got into that job was, I wouldn't call it ordinary, because I had talked to management previously several times before, and they actually kind of got me into that job. I saw that they were advertising. I actually called up the CEO and said, "Look, there's this job here, and this is kind of like what I'm doing. Do you think you can get me a meeting with the partners?" And 3 days later, I was in the job. So, yeah.
Well, it probably helped for sure when you're like, "Hey, look, I'm a shareholder, and also I'm kind of interested in getting this job too." I mean, I think that would endear you to any CEO or med. Like, oh my gosh, not only does he want to work here, he's a shareholder already. Like, bring him on, let's go.
Yeah, absolutely. Now looking back, 100%.
I love that, man. That's so cool. I mean, what back then in 2019, as you're developing your thesis, you're digging deep, developing the philosophy, everything like that. I mean, what was it about at the time, Kelly and Partners, that attracted you to the name, wanted to become a shareholder, and then ultimately wanted to work there? I mean, it sounds like just job-wise, it made a lot of sense. So maybe don't answer that part, but like, what, as you're developing your thesis, what was it about Kelly and Partners that attracted you to the name?
Yeah, so I'm just thinking back to around that time, I was still kind of sculpting the way I was doing things. And it wasn't until maybe it didn't take me too long, to be honest, because I'd say between June 2019 and December 2019, I was just this avid soaker of information. So I was, just absorbing podcasts, books, just everything. That would kind of be if you were to say, like kind of like the first year in the gym or like the training wheels on a bike. It's like the learning period for me was that 6-month period. And Kelly Partners is kind of in the middle of that. I was, just chopping and changing on what I was kind of finding interesting, kind of landed around the type of business, which was garpy, but cheap, if you were to put some labels on it. And yeah, so what's really standing out to me at the time, it probably wasn't as fleshed out as it became, but I think that's important as well. So it's these ideas that seed in your mind, they don't really develop until maybe a year or two into the thesis, essentially. But what interested me at the time, so obviously founder-led business. I knew it very well. I drive past the Wollongong office every day. So knew it well, knew the workload well. And, I just, at the time, the thesis wasn't too developed, but, I could tell that they were creating shareholder value through acquisitions and I kind of knew the way the accounting worked, and if you know anything about serial acquirers and stuff, it can get a little complex in terms of the accounting. But if you pass through that, there was something there. So, yeah.
So, let's talk a little bit about that experience and maybe the effect that it had on your strategy and philosophy developed up until now. What about that experience, or were there any lessons learned, experiences that you had there that you can point to and say, yeah, this definitely had a cumulative effect on how I think about investing today, or even if there was one or two situations, specifically that stand out in your mind?
Yeah, I would say, maybe your peers, but Focused Compounding podcast was very helpful to me.
They're great. Love those
They're
guys.
great. Yeah, they're great. A little more low key these days, given the sort of developments they've had. But they were really active at the time that I was learning. I had a friend who was listening to the podcast. They introduced me, and then it was in the same period of soaking information. I'll probably listen to the entire backlog, like 200 plus episodes at the time. So,
and those are like hour-long episodes. That's no.
I would I would listen to it every time I'd drive to work. I'd put it on the car and listen to the episode, and that would pretty much be my daily routine. And it was great. Learned a lot.
Very cool. No, so I was specifically talking about during while you were at Kelly and Partners. What would you say were some of the biggest takeaways that you had that really had an effect on how you think about investing?
When you say at Kelly Partners, do you mean as an employee?
As an employee, yes.
Okay. So that would have been, say, give or take 2.5, 3 years into the journey. So I kind of had sculpted a way to invest at the time. But if I was just to take away some of the things that helped me while I was working there, I guess it was all business model sort of centric, as opposed to learning anything about investing. It kind of taught me more about accounting firms. So the previous firms I was in, if you've ever worked in a firm, most of the partners in a normal firm, they were relatively reserved on performance. And it's kind of rare to get a firm that's actually like performance culture. So, at Kelly Partners, the performance culture goes right down to every employee. So it's not just sort of the firm is doing X. It's like, imagine you had a profit and loss for the group. You can get that profit and loss down into like layers. And you'd have the firm layer, the partner layer, and then each employee. So it's this pyramid of just going out, and every single step of that layer, they have performance targets or KPIs essentially. So that's a performance-driven culture, and during a lot of that, I learned what they would value, and then a lot of stuff they put in their presentation is really it is actually the stuff that they drive employees to do. So, it's not just as simple as a revenue target. They would also have, a so-called work in progress, which is the stuff you're working on but you haven't built yet. There's actually targets there to sort of make sure that you're doing things efficiently, not just driving revenue.
Very cool. So then now catch us up. At Kelly and Partners, I think, what did you say, like 2 years? Something like that?
Yeah, I was there for 2 years, 2021, 2022. And then at the end of 2022, the recruitment market in accounting was really sort of tight. And then what happens in a tight, it was tight for the employee to find employees. So as you can imagine, the jobs were abundant and employees were not abundant. So, the wages were appealing, to say the least. And at that time, I kind of did some research. And then I went out and just sort of spoke to a couple of firms, because I would have recruitments call me up often. They're kind of relentless when you're working in the industry. But they would call me up, they'd come bring me jobs from time to time. And then I actually I humored one at one time. And then I found out that the wages they were offering me were close to 50% more than what I was getting paid at the time. And you could twist my arm with maybe that much, but it doesn't matter that I'm working at Kelly Partners. Like that wage was kind of hard to say no to. So I proposed, I actually went out and did a few more interviews. I got 3 offers from 3 interviews. So there was no room for failure. That's how desperate they were, because I don't think I was necessarily the most impressive employee.
Right, clearly, of course, yeah.
Yeah, so I had 3 offers. I went back to Kelly Partners, showed them all 3. And I'm like, well, what can you do for me? And essentially they said, we can't do anything. So I moved on. And then my experience at that next firm was far from ideal. It was okay, but it didn't mesh well with the partners. So I decided to move on and start my own business. And that's where I am today. Very
cool. So now we're full-time investor, newsletter. That's the focus. Do you have a fund?
Yes, a private trust. I wouldn't really call it a fund. It's closed to outside investors. But yeah, I do have a portfolio that's not just my money. So it is other people's money. So all of the things that you would think about as a fund manager probably would apply. But I also am I didn't let that work that I did in the past go to waste. I'm also a tax agent, so I still do accounting and tax for small business owners and individuals these days. But it's not a sole focus. It's really just sort of the work comes to me.
Absolutely. Yeah. Like you're not outwardly trying to get that. Yeah. Mm-hmm. All right. So let's dig in on strategy, philosophy, whatnot. First question that I got for you on this point is, what would you say is an ideal investment looks like? You kind of hit on that a little bit. I mean, anybody that probably follows you knows a little bit about that. It's also in your owner's manual, but give us a full look. What does that look like to you? What's an ideal setup?
So the 2 things that I'm seeking is I look only at investments that are in my circle of competence, and I've spent years trying to sort of figure out what that is. And generally, like it's still broad. It's not like this tight knit circle where I say yes or no to things. It's kind of like broadly, I'm looking at professional and financial services, and that's all. If you come to me with a mining company, I'll just be uninterested and say no. Some people will probably scoff at that, just because, you have to be broad and open to ideas. But at the same time, I don't want to look at something that I don't know anything about. I have to get all this background knowledge before I'm even up at the starting line, if that makes sense. So to have this head start on all the business I'm looking at, I find it to be instrumental in churning through ideas. And if you think about system 1 thinking and system 2 thinking, like system 1 thinking from Daniel Kahneman, the system 1 thinking is kind of like it's all by intuition. And system 2 thinking is more of a deeper thinking about things. I am really sculpting and relying on system 1 thinking to really get me a lot of the way. And then, as I sort through that list that results in, I'm kind of, there's less work for me to do because I've kind of filtered through already the things that I might find interesting or be able to understand. So I guess that would be instrumental to my approach. And then the other thing is that I'm very valuation focused. So it's a bit of a trope, but I would say definitely yes, I'm IRR driven. So, if it comes to me an investment that's clearly expensive, then it's probably something I wouldn't necessarily throw it away. I might put it down on the table and say I'll come back when it blows up or something like that. Yeah.
Very cool. I mean, do you also just specifically focus on Australian professional financial services, or are you looking all over?
Yeah, good question. I'm global. So, and that really means global. Like I have held stocks in countries like Hungary and like Poland and, Malaysia and these like countries that most investors probably might not look at all. Not to say that no one looks at them, because obviously the people in that country look at them, but I am really open to every country. And the reason that is I think the business models are similar worldwide. And, what I'm really leveraging is an understanding of business models and the understanding of taxation, understanding of the way accounting firms work, like professional services firms, and wealth management firms. And I think that is similar worldwide. Like if you look at the UK and Australia, for example, the UK is pretty much cloning what Australia has done with their pension system. So they're earlier in. So you kind of, it's the same thing. Like our accounting software adoption in Australia is much higher than most of the world. So you can kind of look at these countries that have no adoption and seeing what they're doing, and look back to Australia and see what are they doing? Like where are they at? And if you think of like a life cycle of the maturity of the industry, so you can carry ideas between countries, and I think that's really helpful.
Let's stick further on that, because that sounds like probably where you go to for most of your idea generation, is that it sounds like you have a main theme that you might be looking at within Australia and saying, all right, well, what maybe in other countries around the world, there might be similar businesses, or maybe there's businesses that are operating in these countries from other. It just sounds like you kind of go from country to country to see if there's any good value based on what you've already seen at home. Am I kind of hitting on it in terms of idea generation?
I think this really goes into game selection. So like the game selection from my owner's manual, I kind of stole the term from Yen Liao, who ran Araft Global. Unfortunately, they wound up their business, but the idea is evergreen, in my opinion. And essentially what game selection is just choosing your spots. So it's my spots would just be in sort of accounting and finance firms, but also I had some other things in there. So I would extend that beyond and say, look, accounting software, clearly something that I'm also using every day, so I'm understanding that. Document management software, we have to really be well covered in terms of security and the way we manage people's documents, because you can imagine if you share your tax information with other people, there's a huge security risk there. And then also, outsourcing as well, something that I'm pretty well attuned with. CPD, like training, even to some extent, sort of wealth management, sort of funds management, and especially sort of pension systems, and that's an area of focus for me as well. So it's relatively broad. It's not just saying, look, I just want to look at accounting firms. It's a lot broader than that. I try to look at things that I think I'm remotely able to understand, and if I see something is good in one country and then I see something in another country, then I'll try to look at, what are they doing that worked for the other country? You know what I mean?
Yep.
Yeah.
Very cool. So let's get into some case studies. I mean, I'd love to hear if you have one that's either a current shareholding or a past shareholding that really demonstrates your philosophy, strategy, as well as the research process, and how you got involved, how you scaled up, scaled down, the whole story.
Yeah, so most of these podcasts, the host usually gets me to talk about Kelly Partners, which I probably will avoid doing today. You can go to any of the other podcasts that I've done, and I always talk about that. So I will talk about something else. And this is a business that it's really close to what I was doing at the time that I purchased it. So this is a business that has since been acquired, but it was called Class Superannuation. And superannuation is our pension system in Australia. So at the time, it was sort of mid to late 2019. I'd been working in accounting firms for 2 years. The firm that I was in, it was skewed towards what's called self-managed super fund accounting. And then as the name implies, it's people that set up their own superannuation fund, which is essentially a trust. It's a corporate structure. And then what they would do is the accounting for these funds. So, and the software that you use to do those accountings is not just a normal accounting software, because the rules around superannuation were extremely regulatory heavy. So it was a really difficult, small market, and the barriers to entry are huge because you have to get your head around all of these different regulations. And there was only 2 software providers providing software to this market. So, and then they were the first cloud software. So they were essentially the first mover. There's barriers to entry. They had probably a 40% market share, and they were getting market share of a number 1 market share in the inflows. And the inflows being DIY funds coming from like Excel spreadsheets onto the cloud software. It would automate a lot of the regulatory process because they kept changing the rules. So you can imagine it's getting increasingly complex. It makes it harder and harder to do in Excel. So it has this organic inflow. And then obviously the amount of super funds themselves were also growing relatively slowly, but they were growing as well. So this accounting software used to do the accounting for these funds. It had probably 30% market share, I will say. And then the other 70% was a incumbent. And so that's the setup essentially. And at the time it was kind of trading around, like say $200 million market cap. So not a small business, but not a huge business. I mean, I suppose it's all your perspective. I would say that's a big business. And at the time in 2019, it had come from like, I don't know, maybe 6 times sales or something down to like 1 or 2 times sales. Oh, maybe that's not the best way to put it. It came down a lot in valuation. So it was at a point where it was interesting to me. And then this is a business with 99.5% plus retention rates. And it priced its software at $250 a year starting price. And the incumbent was $140. So just to give you an idea of how strong this leading demand in the market was. So it was like 80% higher price, and people were still flocking to it like sheep. So yeah, that's the business. And shortly after I purchased it, they purchased a corporate messaging document software business. And just to break down that mumbo jumbo, essentially that would be a software that you use to manage share registries and manage, you can automate the issuance of constitutional documents, trustee documents, changes in directors' interest, and changes in, this is for small businesses, so like businesses anywhere from like 0 to 50 million. Yeah, they bought that business. That was a really good acquisition. Also happened to be a market leader. Yeah, I think the main thing for that thesis was just my understanding of that business. And that was the software that I was using every day.
Right.
And I think the market had just gotten to the point where it's just recognizing being an average user, just recognizing the difference between what the market's perception is and my own, just being a user. And I think that's a common theme in some of my most successful investments. So like just to give you an idea, I purchased that around sort of $1.20 per share. They got acquired at around $3, like probably a year and a half later. So obviously very successful. And then if I was to some other successful investments I won't spend too much time on, but there was another investment that it was what you would call a wrap platform, which was essentially a brokerage platform on steroids, so like a full service broker. And then they would distribute to financial advisors and wealth managers across Australia. And then that platform was the fastest growing platform in the previous 5 years, it was pretty much the fastest growing platform in the previous 5 years, but it was valued at a small, tiny sliver of any other platform. So just to give you an idea, I was looking at funds under administration. So this is all the funds that essentially the platform was administering, and they would take an administration fee, and their fee was the lowest among their peers. So there's room there to increase fees, and they're the fastest growing. So you could probably say that they're undercutting on price. That's the reason they're growing so fast. But if you looked at the top company in the industry, they were valued at 20 times their funds under administration, whereas this company was valued at 800 times. So just on an apples to apples basis, it's 40 times less. So that was pretty much the whole thesis. And then a year later, it got acquired at 4 times the price.
Nice.
So yeah,
nice.
Just be able to recognize, things that seem obvious to me, but not necessarily as an industry participant, but not obvious to others. I have one more I can go through.
Yeah, go for it.
This is probably my most interesting. So I will disclose that I am a shareholder of this one at the moment. So this is Centrepoint Alliance. It's a different thesis. It's kind of a different thesis today as it was in the past. But essentially, this is a business that had been plagued by, a long time in the past. Financial advisors used to do things differently, and they would get a kickback from selling products. And these would be commissions, and these commissions were, it's not just simple as using the product. It's also the advisor gets a kickback from recommending the product. That's one thing. And then once they recommend, they get these so-called grandfathering commissions, which means that they get a recurring revenue source after they recommend someone a product, even though they're not doing any more work. So that was extremely predatory. And the worst thing about this is that grandfathering commissions would continue after the person passes away. So even worse. And they did what's called a royal commission into this practice and other practices, just the industry in general, in 2017. And they pretty much gone through this whole big sweep and cleanup of all of the bad practices in the industry. But this business, it still had these customers were complaining to this business and claiming damages, essentially. So these claims would come through the profit and loss, and it was regulated that these claims could only go up to 2022, I think it was. And then after that, no one can make any more claims. So all I did was I saw that, and I took the claims out of the profit and loss, and it's consistently profitable. And here it is valued at less than cash on the balance sheet. So even with a modest return on equity, you're essentially getting a business for free.
And that's CAF on the Australian, yeah?
Yeah, CAF.
Got it. Cool.
Relatively simple thesis as well. It was essentially looking at the business without claims. And I saw that the advisors were stable. It was still, a business which was profitable, excluding these claims. And they had a lot of what's called a franking credit. Essentially here in Australia, it's unique to Australia. When a company pays tax, they would pay, a company would pay their own tax, and then it goes into an account called a franking account. And when they declare a dividend, you can attach the tax to the dividend. So it's essentially a refund of the tax to the shareholder. And so they don't pay 2 lots of tax. They had a lot of these on the balance sheet. Well, not on the balance sheet, sorry, but like embedded in the business. And then they also happened to have a lot of losses from the claims that had been, claimed over the years from damages. So clearly this told a story of a business which was once very profitable, And then in the middle, they claimed all these losses. So they have all these tax losses and all these tax they paid in the past from being profitable. And then what happens? The claims go away. The business becomes profitable again. And then they pay this huge special dividend. It was probably since they paid more than the stock price that I paid for it in the last 2 or 3 years. So, and then the profits have just inflected significantly. I think today it's probably, it's probably, you probably would have been a 6 or 7x in the last 3-4 years. Yeah. Just from being able to recognize that without these claims, it's a profitable business. So, yeah.
Nice. Well, thank you for all those case studies. And you already disclosed Centerpoint class. They got acquired, so no need there. And just to be clear, Kelly Partners, are you still shareholder?
No, but there was a business in the middle that I was talking about. I didn't give a name. It was that platform business that was called Explore Wealth. They also got acquired.
Gotcha.
By Hub24, and I'm not a shareholder of Hub24. Class was also acquired by Hub24.
Yeah, that's right. No, when you said class, I was like, wait, that's fine.
Yeah.
So my main follow up, when we're, as you said, your main focus really is on what and that's really your main game selection is accounting software and finance firms. One thing when it comes to some of these software as a services that we've seen over the years, and this is across most of them between marketing tech, ad tech, all of them, is that, most investors get a little, squirmy because you can't help but think, all right, when's the next software that's coming that is going to be better? What's protecting them? What's creating the moat here? So how do you think about the moat being created by one of these accounting software businesses, for example, and how do you, I guess, handicap what not just their runway, because the runway is clear, but how far ahead they are than maybe the competitors that are coming up? Because that's everyone's fear when you think about, just software in general, but specifically in financial services.
Yeah, it's not an easy question to answer, sadly, but in some cases, they already have a demanding.
So the intuition comes in, I guess.
Yeah, it really is. In some cases, they kind of already have a demanding lead, so it's not as hard. It's kind of seeing like what are the incumbents doing, and then what are the so-called startups doing, the challenges, I suppose you could refer to them as. But just some things which could be good for software firms is having a big, huge distribution. So usually this means accounting firms as so-called, they usually run what's called partner programs. And then what's appealing for a partner to join a software partner program is generally sort of discounts is one thing, but then also if they provide CPD, vertically integrated software is also more sticky, as you can imagine. So just take, for example, there's a business called Xero here in Australia. It's accounting software. They've expanded overseas, so I'm sure some listeners would know who they are. But just take, for example, here in Australia, they have this long list of integration apps. So I just take, for example, there's Stripe payments, integrates with Xero, but there's also a huge long list of other smaller software which integrate with this software, and that's just having that app store is a barrier. It's a moat or a competitive advantage in its own right, but also Xero has a practice management software, and this is used by the majority of accounting firms in Australia. So this practice management software, the only way that you can get numbers into a tax return generated by this practice management software is if you either manually enter it from another software or you automatically bring it in from Xero. So there you go. Essentially, that is a huge head start for Xero just to have that. And then the more partners that use this, the more likely that businesses that switch accounting firms, the more likely that the other accounting firm is also going to use Xero. And if they don't use Xero, well, it's going to be a bit of a headache. So network effect, I would say, is applicable there. But Yeah, so distribution is huge competitive advantage for software. And I suppose it's because it's B2B as well. Your distribution is through meeting with accounting firms and trying to sell your product to these accounting firms, as opposed to sort of mass marketing. Um, they do a lot of marketing in Australia, but the main user of Xero is accountants. So
Right.
yeah,
Real quick, they're public, obviously. So are you shareholder in
not a
Xero?
shareholder. No,
Okay, gotcha. It's a big company right there.
it's a big company. Yeah.
So next question that I have for you also here. I mean, what's great about your process is that you're really you're going with what you know. Like, all right, do I use this? What are the other firms? What are they using that's a little different on accounting software and accounting software, document management software, pension. You just staying within that core competency, onto itself. So once maybe you're locked in on an idea or a theme, what's some of the research that you do to say, all right, this is actually interesting. Let's go from there. Especially if it has to be something that you happen to not use, for instance.
Yeah. Okay. So I will say that a lot of stuff I do look at is I was a user, but other stuff that I don't use, like let's take for example things in other countries which are localized in that country. So other, obviously, as I said, things are you can carry over from country to country, but let's just take for example something that might not necessarily be the case. It's really curiosity driven. So I wouldn't really have a checklist. I don't operate off checklists. I just have in my mind things to avoid and things to not things to that are appealing. Yeah, whether or not you think that's okay or not, that obviously means maybe sometimes I miss things. But I would stress the importance of not having to be right on day one. You can always change your mind. And then also, yeah, I think that really goes a long way, the curiosity. For sometimes I would meet with management. It depends. It depends obviously on the language, the geography. Most of the management I've met is either in Australia or the UK. Like other countries, I haven't really met. I have emailed them from time to time, things like that. But actually having a conversation with someone in Japan, I've done that before, but it's it's a little difficult. Some management doesn't speak English, some do, but thankfully the Japan disclosures are actually really good. So haven't really needed to jump out of the page and book a meeting with someone in Japan, for example.
Very good. All right, so this is a question I ask everybody on here that I really enjoy everyone's answers here. Is you obviously mentioned a number of case studies, but whether it's one of these case studies or not, I mean, what would you say has been an investing experience or any type of experience when doing research or thinking of your philosophy, anything like that? What would you say changed your career, affected your career the most, or maybe caused you to think about how you wanted to deploy your strategy or the strategy itself? Anything that comes to mind in terms of experiences that you're like, man, that really had an effect on me.
We spoke about it earlier, but Focus Compound was instrumental to me. But maybe as well, Joel Greenblatt was a big inspiration for me. I have tried to do special situations in the past, but with mixed results, so I tend not to do too much of it. But I suppose, what has really been MicroCapClub has been quite good for me since I joined that. I read a lot of sort of tweets and Substack pitches and stuff. So over time, you sort of pick up on things that people see value in, and whether or not you invest or not, it's besides the point. But having this broad network of like-minded people. It helps to sort of think about things in different ways. It's a little hard to pinpoint anything down because I think my experience and the way I do things is accumulated. So I can't necessarily say any one thing had an instrumental. Or if I had to say, it would be focus compounding. But yeah, bad answer. But yeah,
no. I mean, at the end of the day, it's just the opening yourself up to just take in as much information as possible.
Yeah, exactly.
Right? We have to nail it.
I suppose on the flip side of that, you need to have a sense to be able to turn bad ideas away, and that can be easier said than done for a beginner. But fortunately, focus compound steered me on the right path. So over time, I kind of got an idea of the things I was more attuned to. More, I got a good idea of how I am as an investor. So I think that's important as well. So some people are different.
When it comes to your game selection and, or I guess companies that, I mean, what are the red flags for you when it comes to your main pool that you're hunting in? And let's not just say the inverse of everything that you are looking for.
Well, actually, it's difficult. Red flags, but not the inverse. People,
I mean, or you
clearly
can,
the people.
Okay, sorry, I take that back. It can be the inverse, but we'll spell it out.
Yeah. Okay. So competition. I will not necessarily. I like competition. Like, I think competition is good for business as opposed to bad, but maybe sort of the direction of competition is something that I try to look out for. So I just take, for example, this is a business that I don't own, but there's this accounting software business in Poland called iFirma. And iFirma at the moment has going through a period of declining profit margins. It's still growing its revenue, but declining profit margins. And the reason that the profit margins are declining is because they're doing more advertising. And you ask yourself, that's a direct reaction to competition in Poland. So there's an accounting software consolidator called Visma. It's a private business. It's huge in Europe. And then they have this Polish subsidiary called Infact. And Infact is doing significant amounts of marketing. And that's really pushing iFirma to drop their, not drop, but massively increase their marketing spend to try and keep up. And then in addition to that, accounting firms are also going out there and sort of creating their own platforms. So competition is extremely heated up in Poland for that business. So these are some things that I would look out for. The direction of competition is important. I'm pretty happy with just sort of slow burn. It's really just sort of, if you see things which are aggressive, you should be really cautious around that. But competition, people involved, I probably had a mixed bag with assessing people. It's a little hard, especially when you talk to them. It's a little hard to get past their charisma. I would say I'm relatively introverted, so assessing people is a little difficult. Not the most extroverted person, so that has been difficult in the past. And I would say that's probably difficult for a lot of people. Just sort of they do something and then they say something and they'll not do another thing, or stuff like that. Always difficult.
Or it's hard to just, they'll say that it's coming and you're like, or that they're going to do it. You give them a little more leeway. You're like, all right, they seem like my friend, and they'll get there one day. Yeah.
Yeah. So like, obviously the counteract to that is, you should be focused on their track record.
Totally.
Yeah. Look, don't take what they say, take it with a grain of salt, essentially. You have to verify that they actually know what they're doing. Have a look back at their history, see what they've said in the past. Did they deliver on that? Yeah.
Tell you, man, I'm doing interviews for 13 years now. I've heard I guess you'd say proclamation that could be done, you
Yeah,
know?
but I would say like the negatives to 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 say to your point, it is the inverse, but it's also like some of the normal tropes of other investors would have. So like the people, the competition,
Right.
um, price for me is a huge one as well. A lot of stuff I would say the business is good, but I don't like the price, and price is a huge hurdle for me. So obviously it's in the name, hurdle rate, and a hurdle rate implies a discount rate. So I would do what I would generally try to do is as accurate as possible over the next 3 to 5 years. That's the type of modeling I would do. Um, and then I would, beyond that, I'm probably stepping out of my bounds. And I think whether or not you agree with that, it's besides the point. It's just the way I do things. Yeah, yeah.
Very cool. All right, so we're pretty much there. We've covered quite a bit today, and I'm sure we'll have you back on at some point. But close this out. What would you say, for anybody that's either new to investing, new to microcaps, new to even looking at Australian microcaps? What's that maybe one piece of advice that you would give to them?
Well, if you've got a US audience, I would encourage people to look at Australia.
Yeah,
It's
there you
not
go.
as small a country as, obviously we have a small population, sort of just under 30 million people. It's 10% of the size of the US, maybe less. But we are a developed country, and we do have very Victorian roots. So the business and economy is developed in a far progressed way, and I would say in some cases maybe even progressed further than other countries. So it's not we're not some small cottage market, emerging market. It's true business with truly deep legal system and deep financial markets. So yeah,
Very
I
cool.
would encourage people to come look at Australia.
Heck yeah. That's a great place to end it right there. So with that, Tristan, where can our audience go and find more information? I kind of said it at the beginning, but let's just repeat it here for people to find you on social media as well as your Substack.
Yeah. So if you want to reach out to me, you can do so on X. So X hurdle underscore rate is my handle. And then also I have a Substack. It's just hurdle rate without the underscore.
Very cool. All right. Well, Tristan, thank you so much for joining me today. Really do appreciate it. Good luck. Stay safe. And I look forward to our next update.
Thanks for having me, Bobby.
Thank you.